begin the show then. First up, by putting the spotlight on the Digitizing Make in India report by BCG and Matrix India. Sudipto Sannigrahi, who's the managing director at Matrix Partners, joins in to discuss the insights. Good to have you on board. I want to begin by talking about what exactly, according to the report, are some of the key drivers that are propelling the manufacturing wave in the country.
Sure, Avanne, and great to be back. If you remember, last time also we did a Digitizing Make in India report and we spoke, and the big focus of last year's report was on digitizing of different supply chains within B2B. This year, we speak a lot about the big pillars of manufacturing in the country. Over the last sort of 12, 18 months, we've spoken to over 100 people across founders, operators, policymakers, advisors, on what is happening in the manufacturing space. And we see multiple different sort of tailwinds come together at the same time. One, obviously, there's a significant amount of government push in terms of PLIs, DLIs, which is propelling the manufacturing sector. Second, there's a global realignment of supply chains, which we call China Plus One, where India wants to produce its own products for its own domestic consumption, and B, India is increasingly becoming a bright spot for exports for the world. C, India always had the talent and the labor advantage. And we see a lot of folks from Valley coming back to India and contributing to Indian economy, and obviously India's cost advantage in terms of labor and utilities. And four, we are seeing a significant infrastructure boom and financial services boom. So when you take all of these together, it makes it very conducive in terms of manufacturing environment for the country, which is why we are significantly bullish that as India takes its journey from a 4 trillion economy to a 10 trillion economy, around 30-35% of that is going to come from manufacturing. And that's one of the big things that we highlight in our report.
So what about EV and renewable energy? Because there's a large-scale electrification of mobility that's being undergone, and there is that focus really towards cleaner energy sources. Is that something you're observing?
Yes, definitely. If you look at, obviously, there are 5 big themes we speak in the report. One is energy, and a lot of that is renewable energy. So at a fundamental level, it is important for every nation to be independent on energy, which means not depend on other countries for either oil or gas. And the only way to do it is focusing A, on your cars, get it electrified, and B, have huge sources of renewable energy. And across both these domains, we see significant momentum picking up. If you look at EVs, today the economics of buying an EV for 2-wheelers and 3-wheelers is quite clear, which is why you see a lot of adoption in that sector. So we believe by 2030, close to 14 million vehicles on the road will actually be EVs. That's around $40 billion of spend on EVs alone every year. Similarly, on the energy side, we see close to 40 to 50 gigawatt hour of renewable energy being created in the country every year through solar, through hydro, through sort of wind. And that will also be a big push over the next 7 to 8 years. So I would say energy is a big thing. We should see 14 million EVs on the road by 2030. And we should see a capex of close to $40-45 billion every year to create capacity of 50 gigawatt hour of more renewable energy that's happening. And given there is so much demand of these sectors today and limited quality supply, there's a huge opportunity for also incumbents to play a role. You can see the share prices in the last 12-18 months of companies in the energy sector, and they have done really, really well because demand is outstripping supply at this point. And I think there's a huge amount of opportunity, and we'll see a lot of players actually play a role across EV, battery, and different forms of renewable energy.
And where does India stand in all of this? We are the third largest startup ecosystem in the country. What about the per capita data consumption and patterns there?
So we are the third largest startup ecosystem in the world globally. I think if I talk about just the sectors that we have mentioned in the report, right? Only last year, I think B2B commerce, agri-tech, all supply chain companies in B2B and manufacturing raised more than $1 billion. Our portfolio companies, Captain Fresh, WeGrow, bunch of others raised. And when you look at manufacturing, which is EV, semiconductor, defense, space tech, drone tech, even that sector raised more than $1 billion last year. So I see a lot of capital actually coming into these core sectors. A lot of it is obviously possible today because the country is getting digitized, people are using technology, but a lot of momentum over the past few years, and I see that to continue over the next several years.
Right, and Sudipto, given that we've got a lot of comparisons, we liken India to China often, and do you think that India is capable to maybe emulate China's manufacturing success that they saw in the early 2000s?
So if you look at the growth of countries, right, um, China's growth was on gross capital formation, which is capex and infrastructure development, both public and private, over the last 30 years, which actually was one of the key drivers of China's growth. We see a similar pattern happening in India, where over the next 8, 10, 15 years, there will be significant capex across multiple sectors of national importance. And we call these sectors out in the report, but there are five big themes or sectors that we believe are very core to national importance. One is compute, which includes semiconductors, electronics, AI and cloud. Second is energy, which we spoke about, which is EV, renewable energy. Third is defense, which also includes surveillance like drone and space. Fourth is agri-tech and food security. And fifth is infrastructure development. And if you look at China, they had a big focus top down from the government on these five sectors over the past 15, 20 years, which led to China's development and China's manufacturing share as a percentage of GDP to grow consistently since the late 1990s to maybe 2019, 2020. We are seeing some of that pattern play out in India today. And if you look at most geographies, when they saw really robust compounding growth, that came on top of industries of national importance with top-down focus, as well as a lot of engagement and entrepreneurship from private sectors. The last point I want to make when you compare with China, I think China also developed by creating ecosystems of these individual industries. So if you go to China, there are multiple free trade zones, and each of those free trade zones actually focusing on a particular sector. So you will find a zone which specializes in semiconductor, you will find a zone which is great in auto, you will find a hub which is great in textiles. If I look at India and if you look at India's national corridors, and we have elaborated that in our report highlighting examples, India is also taking some version of that same strategy where we are creating national corridors and creating clusters of excellence in different industries. Because when you have to become large in an industry, you not only want the end players, but you also want the supply chain players, the component players, and the ecosystem players to come up. And the way to do it is a cluster-based strategy, which India has also taken. So overall, focus on sectors of national importance, cluster-based strategy, and a lot of government incentives leading to gross capital formation are the reasons why I believe that we are and we will emulate a lot of success that China saw in manufacturing.
And what about the outlook then when it comes to the semiconductor market in India, the electronics market in India? There are projections as well of $500 billion for that sector by FY30.
So if you look at all the sectors, and probably manufacturing will add 1.5 to 2 trillion over the next 6, 7 years. The biggest sector is actually compute, which is semiconductors, cloud, increasingly your own LLM and AI is on top, and the electronics manufacturing sector. And this is the sector which will drive the biggest amount of growth over the next 6, 8 years. Now, within that, if I deep dive on semiconductors, there are two parts to semiconductor. One is fabless design, which is companies like NVIDIA, which design chips. And the second is manufacturing, which is companies like TSMC, which manufacture chips. I think there are significant opportunities across both. On fabless design, a lot of it would be led by startups who come, design, and create chips for Indian end customers, say, for example, electric vehicle makers. Custom designed ASICs built out of India for India will be a big theme within semiconductors. A lot of them will be venture capital backed, and we hope to see a lot of really good semiconductor companies actually come up in India. Interestingly, venture capital started to fund semiconductors. Silicon Valley is called Silicon Valley because of silicon. So there's a huge amount of scope in semiconductor design. Within semiconductor manufacturing, I think it's capex intensive. So a lot of existing incumbents and global MNCs will have to play a large role there. And if you see all the announcements that we have had over the last 6-8 months, starting from Micron to now Tata, on setting up large fabs for packaging and obviously foundries, I think there's a lot happening there, which is a combination of government support and private players. So see a lot of activity happening in semiconductors, both at fab and fabless design, and driven by both venture funded startups and large incumbents in this space.
And how are you looking at the EV market really growing as per the reports? What are the projections in terms of the kind of CAGR growth that we can see over the next few years?
Sure. EV again is interesting. As you know, we're early investors in Ola Electric. I think there are multiple parts to EV. First is just the OEM, companies that build the EV vehicles, right? There we feel there are already large, established, well-entrenched players, companies like Ola Electric, and obviously the large incumbents from ICE, which means the Tatas, the Mahindras, the TVSs of the world. So I think the OEM sector has broadly played out. And there are already large OEMs catering to two-wheeler, three-wheeler, four-wheeler, passenger, and CVs. And they will continue to grow and become larger. And with battery prices crashing and more sort of energy density within a battery coming, the cost of EVs will go down, which means the cost of adoption of EVs will go down. So the pace of adoption of EVs will take up. I think the opportunities, if you're a startup, if you're a founder thinking about EVs, there's a lot of opportunity around the OEMs. For example, there are opportunities in motor controllers and building drivetrains specifically for EVs for Indian road conditions. There are opportunities for building semiconductor and compute specifically for EVs in India. There is opportunity, for example, to work on advanced materials and innovate on cathode and anode materials, which are specific to Indian temperature conditions and Indian supply chains. So the big 40 billion drive will be driven by large existing OEMs, which are established in their categories. But a lot of innovation will be driven at the subcomponent level across motors, semiconductors, cell chemistry, charging infrastructure. And that's the part where we as venture capitalists are very excited about.
And how are you looking then at opportunities when it comes to AI, MCUs, processors? How is that really likely to be at the forefront of India's tech revolution?
So obviously, that's the biggest theme of the decade. Again, we are early investors in Kruthrim, which is trying to build the entire full stack for AI across semiconductors, cloud, and LLM. I think there are multiple different opportunities in AI. Obviously, there are opportunities to build AI accelerator at the semiconductor layer. There are opportunities to build an India-specific LLM. There are opportunities to build applications on top of the India-specific LLM for Indian use cases in Indian languages. But I think the way things will change is anything that you build will have some component of AI to it. Even if you're building a B2B supply chain, there will be some component of AI in optimizing that supply chain. So one is just AI-focused startups which are building the entire stack of AI. But I believe over the next 5-10 years, anything that you build will have a component of AI. If you're building a controller for a motor, how the controller runs and becomes more efficient will have a component of AI. So see a lot of activity happening in semiconductors and LLM for India, but increasingly across different use cases. You will see a lot of AI applications and nuances to existing businesses. And I think that is the big driver for AI for the next 7-10 years.
Thanks for that.